Good morning. This is Coffee with Great Wealth Strategies. This is regular Joe, Eric Kenyon, and I've got my cup of Joe as I always do. Little promo for the Cat Eye Cafe out here in Bozeman, Montana. Yesterday, we talked about high-frequency trading, and I'm going to expand on that a little bit more with some more detail because I've had some people ask some questions. And so what we talked about in the recent development in the stock market and equities market known as high-frequency trading, which is called HFT and in the short term. The term is used to describe a process by which computer algorithms process orders and trades much faster than any human being is capable of matching. We also mentioned yesterday the flash crash of 2010 and how it shook investor trust in the U.S. markets. Remember, we talked about, I think it was the May 6th, and it dropped 1,000 points in less than a second. Unbelievable. But today we're going to look at several revelations that have come to light recently about HFT, including one from a former Wall Street trader himself. In late September, Haim Bodek, who, according to news source CNBC, who once worked for the likes of global banks UBS and Goldman Sachs, spoke with the network about his experiences in the stock market, and what he had to say about HFT was simply put quite damning. He said, quote, may I quote him here? He says, "I felt like playing poker with a bunch of guys, and 6 months after I'm losing over and over and over, they say, 'We're cheating.' We're cheating, guys. Didn't you know? Everyone knew. We're all at the table. We're all cheating." Bodek told the source, and I came to the conclusion that it is actually an unbeatable system right now, period, when you're dealing with HFTs. Bodek went on to say that HFT, by his estimate, accounts for between 50 and 75% of current market activity. One particular trick he mentioned was queue jumping. I hadn't heard of that, but he explained it, which involved algorithms front-running larger institutions as they tried to put a floor on price developments. Because of the churn created by HFT activities, price changes occur quickly for most investors and traders to react way too fast. The computer programs are thousands of seconds ahead of everybody else. According to an article that was published by finance industry source UBM TechWeb, the Chicago branch of the Federal Reserve, this is the Chicago branch of the actual Federal Reserve, had been voicing concerns about HFT since 2008. The central bank feared that such activities would expose vulnerabilities in the system. This terror was realized in early August when equity firm Knight Capital suffered a $400 million loss after HFT algorithms went berserk due to a simple computer glitch. So it's a bad sign when even those who maybe benefit directly from HFT activities are saying the system's completely rigged. Therefore, it's a great idea for investors to consider other methods of asset protection. One way to store your money safely is by investing in cash flow real estate. By purchasing quality rental properties, you see returns that aren't subject to lopsided rules of the stock market, HFTs, and flash crashes. So this is Coffee with Great Wealth Strategies. Hope this explains a little bit more about high-frequency trading. And this is Regular Joe. Thanks for joining us. Bye-bye.